U.S. markets tumble as President Trump says China played it wrong in tariffs retaliation. The U.S. stock market took a significant hit this week, tumbling as President Donald Trump doubled down on his stance against China following its retaliatory tariffs. As market indices like the Dow Jones and S&P 500 saw sharp declines, Trump criticized China's approach to the ongoing trade dispute, claiming that they played it wrong in their response to U.S. tariffs. Let's take a closer look at the current state of the market, Trump's remarks, and what this means for global trade. The market's response. Why are stocks falling? The U.S. stock market has been experiencing substantial volatility in recent days, and the downturn is largely attributed to the ongoing trade war between the U.S. and China. After months of back-and-forth tariff hikes, China announced new retaliatory tariffs on U.S. goods, affecting industries such as agriculture, technology, and manufacturing. These retaliations have raised concerns that both economies are heading into a full-blown trade war, which could have long-lasting effects on global markets. The immediate aftermath has been a sharp drop in stock prices. Major indices such as the Dow Jones Industrial Average saw significant losses, with investors becoming increasingly nervous about the uncertainty in global trade. Tariffs, after all, increase costs for businesses, and these added expenses are often passed on to consumers, leading to inflation. As prices rise and profit margins shrink, stock prices can fall, leading to further market instability. Trump's response. China played it wrong. President Trump has been quick to respond to China's latest tariffs, defending his administration's economic strategy while criticizing China for its actions. According to Trump, China's decision to retaliate was a miscalculation. He claims that the U.S. economy is strong and that China's response to U.S. tariffs will only hurt China more in the long run. Trump's central argument is that the tariffs are not just a short-term tactic, but part of a broader strategy to push China into fairer trade practices. The president believes that China has been unfairly benefiting from trade imbalances with the U.S. for years, and his administration's aggressive stance is meant to level the playing field. In his view, China's move to impose retaliatory tariffs was playing it wrong, as it further strained an already delicate relationship and caused unnecessary economic disruption. Trump has also stated that the tariffs are part of his larger plan to reduce the trade deficit with China and bring manufacturing jobs back to the U.S. According to the president, the tariffs are a way to make China pay for years of what he sees as unfair trading practices. He insists that the long-term benefits will outweigh the temporary market volatility. The impact on U.S. businesses and consumers. While Trump insists that the tariffs will ultimately benefit the U.S. economy, the reality on the ground is more complex. U.S. businesses, especially those that rely on imported goods or international supply chains, are already feeling the effects. Higher tariffs mean higher prices for raw materials, components, and finished products. Companies that rely on affordable imports may be forced to pass those costs onto consumers, resulting in price hikes for everyday goods. Moreover, U.S. agricultural sectors have been hit particularly hard by China's retaliatory tariffs, with farmers seeing their exports to China become more expensive or even barred altogether. This has led to a decline in farm income, adding pressure to the broader economy. What's next for the U.S.-China trade war? The key question now is where the trade dispute goes from here. President Trump's defense of the tariffs suggests that he is willing to endure market volatility in the short term to achieve his long-term economic goals. However, many investors and analysts are concerned that the ongoing tension between the U.S. and China could escalate further, leading to more damaging economic consequences. If China continues to retaliate, it's possible that U.S. businesses could face even higher costs and consumer prices could increase. On the other hand, if both sides return to the negotiating table and reach a compromise, there could be some relief for markets. In any case, the trade war seems far from over, and it's likely to remain a key factor influencing the global economy in the months to come. Conclusion. As President Trump stands firm on his stance regarding tariffs, the U.S. stock market slide is a reminder of the far-reaching impact that trade wars can have on global markets. While Trump believes the long-term benefits will outweigh the short-term losses, the situation remains volatile. With both the U.S. and China facing economic pressure, The coming weeks will be crucial in determining the outcome of this ongoing trade conflict.